Hello, and welcome to my channel. Thank you so much for being here. I hope that you have a great start to your day. I'm here with a quick stock market update. The market closed with mixed results today. Headlines that matter. The Dow fell nearly 300 points. The Nasdaq eked out a small gain, and the S&P 500 slipped again. Investors digested mixed corporate earnings, latest inflation data, and comments from Fed officials. Recession fears are coming back. Richmond Fed President Tom Barkin said the economy was slowing and still had too much demand. He noted that lending pulling back is a good thing, suggesting that the Fed will keep rates higher for longer. Big movers today showed just how fast news can reshape sentiment. For example, Keurig Dr. Pepper tumbled more than 12% after announcing an $18 billion all-cash deal to buy the maker of Canada Dry and Crush. Dr. Pepper also said it would split into two, a move that investors didn't like. Barron's pointed out that the stock is down about 35% from its recent peak. That's quite a drop. Another example, RH, the maker of high-end furniture, was down almost 14% after the U.S. announced an anti-dumping investigation into furniture from California, and that's because the company imports a lot of its products from China. Wayfair and Sonoma were also down on this news. Intel shares were up about 4% after news that the U.S. government agreed to buy 10 million shares of the company, so they now own about a 10% stake. Barron's pointed out that the purchase was part of the government's effort to bolster semiconductor manufacturing at a time when there is growing concern about dependence on foreign chip supplies. Nvidia was also in the spotlight, rising another 3% ahead of its eagerly awaited earnings report tomorrow. So far, the chipmaker has defied the downturn in the sector, and Wall Street wants to know how it did. Gold-related DRD gold surged more than 3%, as did the VanEck Va Gold Miners ETF, as investors sought safe haven flows amid escalating geopolitical tensions. Apple held firm after Elon Musk's companies Tesla and Twitter filed a lawsuit alleging that Apple was engaging in anti-competitive behavior by requiring iPhone users to use its own in-app payment system instead of competing services. So what does this tell us? Earnings expectations and sentiment remain strong for those companies that are able to grow even during tough times. Leadership and innovation continues to drive sentiment. And of course, sentiment can change very quickly based on who wins and who reacts to the news. If you want to learn more about these topics, check out my video from yesterday. It covers top 3 stocks to watch tomorrow. You will find the link in the description below. Thank you for watching. If you enjoyed this video, give it a like and consider sharing it. Subscribe to my channels. I would love to have you back for my next one. And if you enjoy reading, find me on a newsletter platform. I'll see you in my new one tomorrow. Have a great rest of your day. Bye for now.